You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. So we'll talk some equity, some metals, some rates, some energy, lean hogs, fluid milk. You never know what the heck's going to make it on the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. And make sure wherever you listen to the show from live after the fact, however you get access to it, make sure you hit us up. Those questions, those comments, those insights, those pearls of wisdom. We do indeed love to hear from you guys. You guys are the reason we do this show. So keep those questions, those comments coming. We love to hear from you. If you like what you hear, make sure you head on out to your platform of choice and leave those reviews. That helps the flood of new listeners continue to discover the program. And joining me on the old program today, got a wee bit of weather going on here in the Chicagoland area. So I'm sad to say he's not sitting next to me. We're not enjoying delicious, tasty gourmet burgers. But we are joined once again for the second week in a row, so a nice little streak going here by Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell, holding down the FTSE Russell hot seat. Mr. Sean, welcome back to the program, even if it is via the magic of telephone, sir.
It's great to be here, Mark. It's always good to be on the show, and thanks for having me.
Of course, you don't get to swing the hammer of Thor if you're not in the studio, sir.
I know. That hammer. I need the hammer.
Everyone needs a Mjolnir in their lives. If you want to know what we're talking about, listeners, you gotta come see the studio for yourselves. And also joining us, we don't know if he's worthy. I guess we'll have to find out. He's our old friend there, holding down the CME hot seat this week, Mr. Tim McCourt, Managing Director and Head of Equity Products over there at CME Group. Also hangs his hat in a little bit of crypto these days. Mr. Tim, welcome back to TWIFO, sir.
Yeah, thanks, Mark. Thanks for having me. Good to be on the show with you and Sean, as always.
Yeah, we're not doing it in a hallway in Boca Raton, Florida this time, though.
No. I mean, as much as I like that, it's good. It's still good to see you guys, even if it's just virtually today. But, thanks again for having me.
You're seeing me? You have a camera
It's always good
in here? Or you're spooking me, Tim? Are you watching me right now as we speak? In which case, I need to get my security team in here to do another sweep. But it is that time of the show. We kick things off looking to both the dark side and the light side, the big movers and shakers for the week so far when it comes to all things futures. So, Tim, you're holding down the hot seat this week. You get to decide, should we start to the upside, a.k.a. the light side, go nice and bright and cheerful, or should we go to the big movers to the downside, a.k.a. the dark side? Where do you want to start, Tim?
Oh, let's start with the light side.
See, Sean, I know why you like him now. You two are of like minds. Sean always starts with the light side. All right, we'll go to the big movers to the upside again. These are just which futures are moving this week. There's no volume, there's no volatility, there's no OI chain, nothing like that, no skew. Just straight up what is moving out there on the futures front over there at CME this week. Let's start to the upside. Number 5 to the upside, Nat Gas, having a rare up week for a change after having so many weeks in the bottom 5, getting to the light side this week. Up nearly 2%, about 1.9%. Number 4, the NASDAQ E-mini, up a little over 2%, about 2.09%. Number 3, soybean oil, up nearly 2.5%. Number 2, the Nikkei, obviously yen denominated there, up nearly 2.75%. And number 1 with a bullet this week is copper, up exactly 3%. It's been an interesting time for copper. We touched on it recently on the show, how it is becoming more of an options story. May have to return to revisit it this week, given that performance here. Now let's go to the downside, to the dark side. Number 5, which is kind of where you want to be on the dark side. If you got to be on the dark side, you want to be at the bottom of the list, not at the top. And number 5 is soybean meal. So the oil is up about 2.5%. The meal down 1.61% this week. So interesting difference there. Number 4 is the old Ultra Bond, down 1.73%. Number 3, our old friend Lean Hogs, making another appearance on the list, this time to the dark side, off nearly 2%, about 1.9%. Number 2, another old friend, WTI, also popping up again, off nearly 2.6% on the week. And number 1 with a bullet, once again, dairy. Dairy keeps rearing its ugly head up here, down nearly 4%, about 3.75% for Class 3 milk. So a lot popping off. We'll revisit some of those products on the show in a little bit. But we got Tim joining us here. He holds his hat in equities. But before we get there, like I mentioned, he scribbles on his business card a little bit of crypto there as well. And you may have heard, listeners, there has been a little bit of an announcement there, a little bit of a new product launch on the crypto space, certainly since the last time Tim and I have been on. Tim can attest to this literally every time he's been on the show over the past couple of years. I think the first, second question I've always asked him is, when are we getting the options? When are we getting the Bitcoin options? Well, they are finally here. Tim, you must be excited. It's got to be like birthing a child for you product guys to have a new product finally out there in the wild. Walk us through the launch, how it went, and what are your thoughts of the early days here, the Bitcoin options?
Yeah, so, it's certainly, Mark, you've always been asking me, and it was always tough to say, it's nothing in the pipeline when we were working on it behind the scenes, but it's great to have it out here now that we can talk about it on TWIFO.
So you were lying to me, you saying then? You were out and out lying to me is what you're telling me.
maybe withholding, right? So we launched the options on January 13th, and we're pleased with the response from customers and market participants so far. As you noted, product launches in general can be an exciting time. It's always interesting to finally launch the product into the public marketplace and see your hard work kind of come to life. And the Bitcoin options has been going great. We're getting great feedback from customers. We've traded a little under about 500 contracts since launching back on the 13th of January, a little under 2,500 equivalent Bitcoin. And the market's really been coming along nicely. We're seeing quotes that are 3 to 4 ticks wide on the at the monies, 2 to 3 ticks wide on the out of the monies. And remember, each tick is $5 per Bitcoin because these are options on our Bitcoin futures here at CME. So the fact that you're looking at, $15 to $20 wide at the money on Bitcoin when it's trading at $10,000 and it's a $50,000 contract, that's pretty good, in terms of, I think, the fact that we're getting those markets to develop this early on. And OI has been nice, where we're seeing a little under 400 contracts of OI. So we're also seeing per contract traded, pretty reasonably also establishing a lot of open interest. So we're not necessarily seeing people just in and out of the contract as well. All great developments a few weeks in.
Yeah, it certainly has been interesting to watch. Obviously, we're deep down the rabbit hole. We were anxiously awaiting the launch of these products. A lot of our audience was as well. So when that day finally came around a few weeks ago, everyone in our audience was kind of waited with bated breath to see what we would see. Of course, it maybe didn't help that Bloomberg put out a very, shall we say, praiseworthy piece not too long ago saying the futures are blowing the doors off, which they were. I think the Friday before the Monday launch of the options, they had done something like 13,500 contracts on the future. So they were even saying in Bloomberg, this is paving the way for an explosion of volume in the Bitcoin options. And of course, it did well the first day, but it was about 54 contracts. So it wasn't, tens of thousands as maybe some had been expecting who were reading that Bloomberg article. Then, of course, also, I think it was partly compounded, too, for a lot of our audience. They were trying to check intraday what's going on. And CME had tweeted out the link, but to effectively their historical volume page. So it was showing the volume for up to the previous day. So obviously it was showing no volume for the Bitcoin options as yet. So a lot of our audience was freaking out saying, what's going on? There's no volume. So it was kind of a whole bunch of fun things going on at once on that first day. But I was pleased to see that there were actually some contracts on the tape. But I'm curious, Tim, because obviously there was such a lead up to this. Obviously that big piece came out in Bloomberg right before the launch, kind of setting the bar pretty high for you guys. I wonder what you thought about that as well. And then coming out of the gate, obviously good volume for a new product, but it wasn't, 13,000 contracts. What are your thoughts on a bit of that early disconnect between what we're seeing on the futures side, which continue to light it up? We did something like 17,000 contracts the other day versus the options, which are still kind of getting their footing out there.
Yeah, I think it's a great question, right? And we know from our experience, and as you know in your experience in the market, successful option products certainly require a robust, liquid, underlying futures market. And the CME Bitcoin futures have become one of the most liquid listed Bitcoin derivative products in the world over the past 2 years. And January, as you mentioned, was a great month for that, where we did a little bit under 11,000 contracts per day, or almost 55,000 Bitcoin equivalent in January 2020 here. So that's certainly great, and that's a precursor for the introduction of an option market. But as you also know, the robustness or the velocity of the futures market doesn't necessarily guarantee the uptake of option markets. It's a requirement, but not necessarily an indicator. So when we look at building option markets, it is a different challenge, I think, as an exchange operator, getting your liquidity providers and market participants to quote across an entire vol surface, across an entire term structure. When you think about that, it's a lot different of a challenge than just quoting a two-way market on 4 or 5 futures spaced out a few months, right? So there's different challenges, but the fact that we have had volume every day since launch, the fact that we have tightening bid-ask spreads in the option, the fact that we have quotes across all, most of the maturities, across all the strikes, from even at the monies to out the monies. We've even had a few high strike interval options trade where the 50, 60, 70,000 strikes have traded a handful of times. These are all great things to see, and we're confident that as participants continue to onboard the product and digest how they want to price and trade options on Bitcoin at CME, that we'll continue to see new participants and growth in our product, certainly buttressed by what we've been able to achieve on the future side. So I'm excited to see what the next few weeks bring for the options at CME.
Yeah, you're right. We did see some, amidst those early contracts, we did see some, I think, interesting prints, to say the least. Deep, 50, 60,000 contracts, like you said, strike contracts going up on the put side as well. So deep in the money stuff, which was kind of interesting. Not at all what I expected, kind of carry/parity plays going up there early on. So a lot of interesting stuff hitting the tape very early on. And we did note earlier this week, actually, it seems like the volume ticking up again. I think it was on Monday, doing about 50 contracts, about 48 contracts, which is pretty high. And by the way, Tim, I'm going to keep quoting contracts. It's one of my pet peeves in the crypto space is that everyone quotes notional, and it just drives me crazy. One of the things I was most excited about when you guys getting into the Bitcoin option space is like, here, finally, someone's going to quote contracts. And what have you guys done? You've been quoting notional the whole time, Tim. So I'm going to keep quoting contract volume. I hope that doesn't offend you.
Doesn't offend me, and I can roll with it. I think contracts is our preferred. We're kind of quoting contracts out there as well. But I think when you look at some of the other spot platforms and some of the unregulated platforms with respect to some of their options and perpetual swaps, there's just this wanting to try and create this apples to apples and strike notional terms. So sometimes you just got to give the people what they want, you know?
I understand there's a demand for it out there, and that's kind of the de rigueur in the crypto space. But hopefully our combined forces, us here at Options Insider, you guys at CME, the two of us working from different angles can fight back against that horrible trend. But, it's interesting looking at what's been going on out there. A lot of people in the early days, when they saw, like we touched about earlier, that little bit of a disconnect between the futures clearly lighting it up and the volume, or the options, I should say, still kind of finding their footing. A lot of the questions we started to receive again, which we haven't really received in a while since the futures launched. When the futures first launched and Bitcoin was about 20,000, everyone was asking us, is this too rich? A 5x multiplier? Are they going to have to make us a mini? Turns out, no. The volume has been pretty robust on the futures, so you guys never had to really do that. And, of course, the sell-off helped a little bit there as well. But now we're starting to see that question come to us again. People are saying, wait a minute, is that what the disconnect is between the options and the futures? Is it, even though they're both the same multiplier, I don't really see why that would be, but people are asking us this, Tim, so I have to put it to you. Are there plans, maybe particularly as a way to gin up some of the retail adoption of the options, maybe go for a smaller size contract?
It's a good question, and I think, we don't have plans to introduce any type of smaller size option contract for Bitcoin. The thing I would also remind, right, that since we are talking options on futures, that these are, think about it where some of the listeners should think about these are options on the more of a physically delivering option, right? When these expire, you're going to make or take delivery of the future. So the option terms and conditions or the option product specifications are a function of the futures contract. So our option contract is on one future, and the future has the 5 Bitcoin multiplier tied to the Bitcoin reference rate. So it's something that is a constraint. So if there was any change, they would first see it in the futures market because we would need to have a different type of future to have a different type of option on future, and we don't have those plans currently. I think, what people will see what's interesting is we did hear some of that, some of the pressure and the wantingness for the one Bitcoin contract when we first launched the futures back in 2017. But even with Bitcoin kind of coming all the way back to 10,000, half of what it was when we launched, we're seeing volumes continue to grow. And I think kind of our position in the marketplace reinforces the need for that 5-coin contract. So we're going to stick with that and focus on building liquidity and the options around our existing products for now.
Well, I am pleased to say that it is finally working. I could finally do by the way, you guys, as always, listeners can play along, CMEgroup.com/TWIFO. And if you go there, I'm pleased to say you could finally now generate a report for Bitcoin now as well. It wasn't working in the early days there, but now we have the TWIFO report up for Bitcoin options as well. And if we parse it, we can see what's going up this week. So far, about 127 options on the tape. So getting back up there again after kind of leveling off a little bit after the launch. 75% of them coming in that front Feb contract with the 9,300 put. By the way, Bitcoin threatening 10,000 right now, 99.05 in the future. So that 9,300 put, though, big print of the week, 32 of those. That was the big option here this week. And everyone, since time immemorial, has been asking us about the skew here in Bitcoin. We can finally break it down in the TWIFO report now. And the puts last week were a little bit, again, these have about 21, almost 22 days to go, so it's fair to look at the skew here. And we're seeing a nearly 3% cheap to the at-the-money were the puts last week. This week, the puts have gotten a little bit of a bid. They're only about 1.2% cheap last week, so the puts getting a little bit of a lift. The calls were about 6.6% rich, so the calls had the bid last week, and they're about the same level this week, about 6.4%. So the calls have come in a little bit. Puts have gotten a little bit of a bid. I think part of that obviously driven by those 9,300 puts that are lighting it up. But as we continue to go up, calls clearly getting the bid out there. Vol, kind of a mixed bag, off a little bit in the front portion, a little bit higher, still around a 57 to a 60 in most of those, implied in most of those contracts out there. So I've been looking forward to doing that for quite some time. It's finally working. We finally have a TWIFO report that you guys can go sink your teeth into over there as well, CMEgroup.com/TWIFO. We can talk crypto the whole show, Tim, but we actually have a crypto show for that, so maybe we'll have to do that one of these days. But before we move on, any other nuggets you want to leave us with on the crypto front, sir?
No, just we're excited and just encourage people to check things out on CMEgroup.com. Check out the report that you were just talking about. That's going to be fantastic to start seeing some of that data and check it back day over day, week over week, when people could look to see how some of these relationships are being formed. We know that's what option traders love to see and love to see divergence from patterns. So now it's great that we can establish a pattern, right? So I think that as we get more and more data, it'll be exciting. I think just the other thing to mention before we move on, another kind of great milestone that we've seen in the futures in January is we did have a new large open interest holder record. We had a previous record from over the summer. We had now back in January, first week of January, we had 55 large traders in our Bitcoin futures contracts. Those are those traders that hold 25 or more futures contracts. So they're holding more than 125 equivalent Bitcoins. That's just great to see that the complex is strong. It's been a great January, and looking forward to see what February has in store for us on Bitcoin at CME.
Yeah, we've been breaking it down for a while there on our crypto show, and the futures have been steadily and inexorably growing out there. So doing decent paper, and that'll eventually, I'm sure, lead to the intersection of the options kicking it in there as well. I'm just happy to finally have a TWIFO report for these options. We've been waiting for that for I forgot how long now. So that's a good thing. Again, check it out for yourselves. CMEgroup.com/TWIFO. Let's keep on rolling into equities land. The other portion, the main portion of Tim's business card. Coming into showtime here, we're seeing a bit of an interesting mixed bag. It's been an interesting couple of weeks out there from a broad equity index perspective. Obviously, a number of forces have been at work over the course of this past. January was a crazy month, volume across the board. We saw strong numbers out of OCC for January. I'm sure we'll see interesting stuff out of CME there as well. And a lot of forces driving volatility, driving volume. Of course, the year kicked off with the assassination of the Iranian general, and of course, tensions in the Middle East. There was the lingering concern over the trade war, which has been injecting volatility into the market for coming up on a couple of years now. Of course, we had other unanticipated things like the impeachment, and then indeed, of course, the growing pandemic fears. So all of this has been mixing into this volatility cocktail. That saw us get pretty elevated and have a lot of sharp sell-offs last week. This week, kicking off the week, seems like a lot of those fears may be in the rearview mirror, at least from the impeachment and everything else. Obviously, the pandemic concerns are still out there, but they're apparently not weighing on the market today. Most of the major indices are up pretty firmly into the green today. Our old friend volatility, aka VIX, is off quite a bit from even our last show. Last week we were in the 17s and threatening higher. This week VIX cash right around a 15, a little bit lower, puts it down about 2.3 handles. The VVIX, aka the volatility of volatility, also down as well, down about 10 handles to about 91 from where it was last show. And of course, our old friend the Russell VIX, aka RVX, that's also in quite a bit, 16.5, down nearly 3 handles. So we have seen a lot of interesting evolution and movement out there in the Russell 2000 of volatility over the course of the past week. And Sean, I know you were out in New York and then you're traveling hither and yon over the course of the past couple of weeks. What's been lighting up your tape in Russell land since the last time we chatted, sir?
Yeah, it's interesting that spread tightening, and Tim, who is the master of the Russell products at CME Group, can also add some color. But it's really interesting to see. You and I have used the words insulated from lots of. The index itself, Russell, the small caps are kind of insulated because of their domestic quality, but it's been extremely volatile. But it as of recently, it has come in with this rally. But it's good to see. And now that we have an election season getting into full force, during the last election season, the Russell 2000 small cap index outperformed the S&P by double digits during that time period 4 years ago. So I think there should be a lot of eyes looking at the small cap space, Russell 2000 in particular, because I think there's going to be some tremendous trading opportunities there.
Yeah, if you think Russell doesn't move in this primarily macro-driven environment, we're seeing the exact opposite of that this week. If I come into Showtime, the Russell 2000 up over 4% on the week, about 4.1%, about 66 handles. So pretty much 1680, so well north still. That 1600 level, everyone said it couldn't break. Well, it did it, and it's still north of it right now. So interesting to see how the small caps continue to move. But you mentioned Tim is indeed the keeper of all things equities over there at CME. And Tim, this is the first time we've had you on for the new year and indeed the new decade here. So we haven't had a chance to kind of pick your brain with you, look back a little bit on 2019 from an equity overall perspective. So let's start there. What were your thoughts on how 2019 shaped up? It's kind of an interesting year, a lot of interesting macro factors driving a lot of volatility and things like that. What were some things that stood out to you from 2019 in the equity complex, sir?
Well, I think the interesting thing is when we look at 2019, it certainly felt a lot more sluggish compared to 2018, which was a record and almost banner year in terms of volume and volatility and events and episodes that we were seeing in the market. But when you actually kind of look at the numbers, 2018 was pretty good, right? Volumes were down on a tough comp, but still from a CME perspective, about our third best year ever in terms of volume. We saw products with that were growing. We introduced the micros in 2019, which is the most successful product launch in CME Group's history. We launched on the S&P 500, the NASDAQ 100, the Dow, and the Russell. So we saw lots of interesting things in 2019, but I think we were missing kind of that volatility of vol, right? We didn't see those kind of long, drawn-out bouts of volatility that we saw in 2018. But then just when you think it's kind of the doldrums of the new year are coming, then we hit January of 2020 where vol, you said, back up in the 17 range. We're seeing ADV in terms of January 2020 up about 11% versus January of 2019 for our options. And when we look at some of the complex in general, we're up about 31% year over year when we're looking at the futures and options combined. So, January has brought back some trading volumes, which has been great to see. OI has been strong. ADV has been strong in January. So I think we're off to a strong start. I think as Sean had alluded to, there are certainly some things on the horizon that will make 2020 interesting. Always looking forward to market participants coming to see me to hedge those. But we also have some bright spots too, right, where the Russell 2000 continues to be an interesting trade in the market. As Sean alluded to, the election typically will impact small caps differently than large caps or even the mid caps. So that'll be something interesting to watch. And we're also seeing more and more people turn to options on futures on the Russell 2000. That continues to be up a few percentage points. We're doing a little under 3,000 contracts of those per day. So I think people are continuing to look at ways to utilize the Russell 2000, which is great to see.
Yeah, Russell lighting it up yet again. Again, you guys can always play along, cmegroup.com/TWIFO. Go to the equity indices, pull up the Russell 2000. You'll see it's a pretty active week out here. Again, this week, we always talk about puts seem to lead the dance out here in the Russell 2000 for whatever reason. That is the case again this week. Decent size out here on the 1,500 puts, going up nearly 800 times. Again, we're threatening nearly 1,700 to the upside. So nearer term, these are March, going out about 42, almost 43 days, March puts here. So a little bit farther out, not quite 6 months or anything, but a little bit farther out and a little bit downside puts. That's kind of seems to be the sweet spot for Russell options a lot these days. Sean, would you concur with that? That seems to be where the sweet spot is lining up for the options, Sean.
It does. And as there's those that need protection, there are those that like to, as we call, harvest volatility. So it looks like that's that sweet spot for that big trade this week.
Speaking of the vol, like we mentioned, it's coming in pretty aggressively across a lot of the contracts here in the Russell. 6 handles out there in that contract with 8 days to go. Again, only 8 days, so it's kind of hard to talk vol in that short of a contract. Let's go a little bit farther out. Let's go out about 22 days to the Feb contract that has about 22 days left. And the weeklies, you can see that one, the vol coming off here pretty substantially as well. Vol off about 4, almost 5 handles here. So it's been a little bit of a vol erosion. Again, everyone who thinks small cap doesn't move with the macros. I think, again, this week is yet another reminder of that. But, Tim, you touched on something I want to kind of go back to for a second. I think the first time we chatted about these was might have been back when we were sitting down in that infamous hallway in Boca last year at the FIA conference. It was me, you, and Sean sitting around a table, people going by us. It was a fun little ambiance set up there. And I think that's the first time you kind of mentioned to me the coming micro futures. And I made note of it. It seemed interesting, but it certainly wasn't something that I checkmarked in my head as like, okay, this is going to be the next hot thing when it comes to equities from CME. And yet that's pretty much exactly what it has been. I think the technical term is blowing the doors off. These things have done ridiculous numbers pretty much ever since they launched. Has this been as much of a surprise to you, Tim, the success of these as it was to me when I first started seeing these numbers coming in? Yes.
I mean, this has surpassed my wildest expectations. I think the team's wildest expectations here at CME Group. I'd like to maybe say I thought it would be this great, but I didn't. It's really been a lot of fun to watch. Like I said, the most successful product launch in our nearly 180-year history, having over 310,000 contracts trade that first day. back on May 6th was amazing to watch. And it's only been more fun than there, right? So we just recently crossed over the 100 million total contracts trading across all 4 indices since launch. And over just the past week, with a little bit of that volatility returning to the market, the micro contracts have combined to an average of about 975,000 contracts in volume per day. So achieving that in, about 190 trading sessions after launch, plus or minus, is truly fantastic. And I think what it speaks to is the original value prop. When we look at this, micros offer active traders a simpler way and kind of a right-sized, bite-sized way to execute a variety of their strategies in our deeply liquid markets. They can tap into the E-mini market, and the market makers and liquidity providers are kind of helping switch that liquidity into the micros for them. And then the individual traders who can trade at 1/10 the size. This has just been a really, really exciting product for them. And it's been, I think, really useful, especially when we get a little bit of volatility back in the market.
So who's driving all this paper? Is it just a retail explosion? Are they just discovering these products en masse and driving tens of thousands of contracts? Or are there big institutions that like maybe the smaller, more bite-sized, more nuanced contract they could hedge a little bit more accurately? So they're driving these. Who's really driving all this paper?
That's a great question. It's actually both. So certainly the original or the main thesis, I should say, is that active individual retail-centric trader. This is the right size for them. Having to deploy about 1/10 of the capital for the margin makes the market more approachable and more accessible. So they're certainly taking advantage of the bite size. But when you think, what was also nice to see is we actually have large institutions, buy-side institutions, hedge funds, CTAs. They're using the micro contract because of the smaller size to be more precise about their trading. They can now allocate more precisely amongst their accounts. They can more fine-tune their inflows and outflows and their hedging needs. And we've also seen some option traders use micros. If you really want to be on top of managing that delta and one E-mini is a little bit too much for you and you're not sure what to do, now you can trade the micros. You can trade those 2, 3, 4 micros instead of kind of always leaving with that rounded half of a future tail on your delta, so to speak, if you're trading the E-mini options. So the increased precision has certainly been a benefit for non-retail participants, and that was always part of our original thinking, but we just didn't think it would materialize this quickly, but they've been right in the mix alongside the retail participants as well.
That has been interesting to see, just the extreme, I think is the only word, the extreme adoption of these micros. Where my next question is going to be, Tim. I have to ask it. I'm legally obligated. A lot of people in our audience, obviously you just mentioned that you can line up the micros with the options nicely if you want. You have to do multiples, obviously, but you can use them as a hedge there. But obviously our audience always wants more options products. So I am legally obligated to ask you, are any plans for micro options in the near future?
No plans to launch micro options in the future. And I think my friend Sean Smith is trying to ask a question, so I'm going to be saved by the bell on this one.
Go for it, Mr. Sean. What do you got on your brain, sir?
I was just going to jump in quickly and just make a comment in regards to some of the dynamics of the micros and how exciting and successful the product has been, and particularly in Russell. But something else other than just it being an institutional product along with retail, it's global. It's trading all over the world. It's trading in Asia. It's trading like 10, 15, sometimes 20% comes out of Europe. Latin America's trading the product. I mean, it's really exciting to see the global distribution that CME has the ability to reach all corners of the earth where there's interest in trading product, and especially seeing it in Russell is just exciting for me to see. And again, I'm a selfish FTSE Russell guy, so that's why I'm mentioning FTSE Russell.
You are sitting in the FTSE Russell hot seat, so it would be improper of you, sir, to address anything else. But I want to pick both of you guys' brains a little bit too, because you guys spend your time when you're not talking to me here on the show. You're out there meeting with clients, with customers, with end users, particularly as it pertains to equities. And equities are very much in the crosshairs right now for a number of the reasons I just mentioned. Of course, we have these lingering pandemic concerns and how that's impacting volatility going forward. Of course, we just had the impeachment. Going forward, we have the elections. There are a lot of interesting factors and at work and at play that could play out in a variety of different scenarios, particularly when it comes to equity volatility. One of the questions we've been hearing for pretty much the last couple of years is, are we going to start heading to a new volatility regime, a higher volatility regime? Is this the moment when the worm turns, when the inflection point, when volatility kicks up into that next gear and remains there for a while. Obviously, we saw in 2017, it was the opposite. The volatility went down and stayed there for the entirety of the year. So we had a regime to the downside there. Last year was a little bit more mixed to mild and modest, but everyone's looking now at some other potential factors out there. And I'm curious for you guys, maybe Tim, we'll start with you. You're out there talking to clients, you're talking to customers and users out there who are slinging equity futures and options all day long. What are you hearing anecdotally from these guys? Are they thinking maybe this really has some legs to kick it into higher gear with volatility? Or is it maybe like everything else we've seen pretty much for the last couple of years? Bit of a blip, kind of one and done, then we move on to the next thing. What are you hearing out there, Tim?
I think that's certainly a great question. And there are a number of factors that can contribute to volatility and then the velocity of the markets and the trading volume. So it's tough to speculate on how any one factor may be impacting the volatility or the volume on any given day. I think the one great thing about CME is, and to remind people, however, when that need to manage risk presents itself, our futures and our options on futures are a great way to help manage that risk. It's a nearly 24-hour continuous market. So when we see events like the presidential elections or Brexit votes or these macroeconomic geopolitical events that aren't conforming to the Monday to Friday 9 to 5 news cycle, so to speak, we're here for you. So I think that's what's important. But Mark, I think you are right. I think when we do see some of these bouts or these episodic returns of volatility, and this was some of my comments about how even 2019 felt so sluggish compared to 2018, is because the last few cycles of this haven't lasted that long. So I think we tend to be short-minded or have a short view of history as traders here. So I think that's one of the things that people are contemplating. Is this a secular shift in volatility? Is this just an episodic bout of volatility? Will this last a day or a week or two? I don't think anyone knows yet, but I think that's what people are trying to ascertain, and certainly a hot topic. Unfortunately, I have no insight to answer the question, but it's certainly, I think, something that people are watching, and only time will tell as we get some more data points here with the markets putting up higher volatility and higher volume in the last few weeks.
Yeah, that'll, of course, be a key driver for you guys in the equity complex going forward for 2020. If we do see a bit of a regime change when it comes to volatility, that'll certainly be seen in the contract volume. Well, so far, January, off to a good start from an overall equity volume perspective. We'll see if that can continue. Sean, I'm curious, same question for you. You're out there, meeting with the traders, the market makers, the end users, the customers. Are you starting to hear maybe anecdotally whispering in the winds out there? We've already had some people come on the network to us and say they think this has some legs. This might be the inflection point people have been waiting for, this particularly around the pandemic and what's going on out there in and around China and the global. Are you starting to hear anecdotally as well, or are you starting to hear, Sean, that it's still kind of a wait and see, kind of fade the blip kind of thing?
I think there's a lot of concern on a macro level. I also think that there's a regional concern. But I think Tim brought up the best point, and that is you've got almost 24-hour access to hedge that risk with CME. And there's just a tremendous opportunity to put on a position to hedge or to take one off if there is a pop in volatility. I remember being at a conference, a risk conference last year, and one of the speakers stood up and said, and he put up a map of the globe it was kind of a heat map, and it pointed to like 27 or 28 different global crises that were going on. Korea, Iran, Iraq, Afghanistan, Central America. There was some stuff going on, but with like a record number of like global issues that could possibly create incredible upheaval in economics and all types of different areas. Volatility was at like its historic low. It was like just flabbergasting for the entire audience. So I think Tim nailed it when he said there's a tremendous opportunity to trade these and in the asset class you need with the CME products. And I think people are always looking for that opportunity to one, protect themselves, and two, to take advantage of heightened volatility.
We could talk equities all day as well. We'll have to squeeze on a few other products so you guys have a beverage, rest your throats. We'll be back in a few minutes to answer some listener questions, so look forward to that. But really quickly, we touched on what were the big movers and shakers of the week. Number 2 to the dark side was our old friend WTI, off nearly 2.6% here on the week. It was a big week if you're watching Crew. You know, people like those important levels out there, the 60s and the 50s. And of course, 50 was broken to the downside this past week. For the first time in over a year, WTI traded in a 40 handle, which was something in and of itself. It's now officially, by the way, in a bear market. It's off nearly 25% from its 52-week high, which came at 66.60 back in April of last year. It's off 20% just in the past month. So again, talking before about the lingering impact of things like this pandemic and how it might impact already weak global demand for energy. Well, we're seeing it play out pretty dramatically here in the price of WTI. People who watch these for a while say once it breaks through 50, kind of look out below. It tends to hang out there for a little bit, even though right now it has rallied back up. Coming into showtime, it's at a 50.91, so north of the 50 handle, off about 1.25% on the week. So it's gotten back some of that sell-off that it had earlier here in the week. Vol, obviously, actually a little bit of a mixed bag, which is kind of interesting. You might think, given that what we've seen, you might see Vol ticking up, and yet it looks like it got a little elevated and is coming in pretty aggressively now, off 2 to 3, even 4 handles in some of these contracts here in the early portion of the curve. So Vol coming in quite a bit, which is a comment we've made on the show here in the past. WTI is more of a volatility product than people initially assume when they first start trading it. They think of other drivers and other things, but it's much more of a vol product, which is kind of interesting. And again, vol moving again here this week. Almost half the paper, about 43% coming in that March contract, which has 8 days to go, which also goes to prove that people will trade short duration contracts in WTI, just not the listed weeklies for some mysterious reason, which we have yet to figure out here on this show. And of that, the 50 puts were lighting up the tape here. Go figure. We broke through the 50 handle. 50 puts, kind of what you expected this week, doing 32, almost 33,000 contracts in that March cycle. So that was the big print here. Let's see what else was lighting it up out here really quick. Then we'll look at some skew before we roll on to some others that are moving and shaking this week. 50 puts doing most of their business on Monday, almost 14,000 of that 32,000 coming on Monday, and about 6,000 each, or 6,000 on Tuesday, about 9,000 Wednesday, and about 4,000 today. So a little light volume today. Good chunk of that closing too. So people broke through the 50 strike, took some puts off. Not surprising, and maybe some reestablishing later on in the week, but looks like the lion's share of it is pretty much closing. Then we have the 45 puts. So some folks saying 50 put wasn't enough. Let's go down to 45, doing 22,000 of those this week for number 2. Then it's a bit of a tie for number 3. The 53 calls doing about 17,700, and the 48 puts doing about 17,200. And round out the top 5, we've got the double puts doing about 16,400. All of that in that March contract here. The skew, it's hard to look at skew with only, let's say, 7-8 days to go. Let's go out a little bit farther. Let's go out to, let's go out to the March contract that has about, did a little more paper out here. Actually, no, let's go out to April, which has about nearly 40 days to go and did about 25% of the paper this week. So a little bit of paper out there. Let's see what the skew is doing out there. The puts were bid. They were nearly 9% bid last week. This week, they've come in a little bit, only 8% bid. Not surprising. We saw the event. We saw it break through 50. You're going to see some of that put skew come in as a result. The calls roughly unched. They were about 7% cheap. At the money last week, they're about 7.5% this week. So a little bit cheaper, but not a ton. Again, the other big story in WTI land is the calls can't catch a bid, and this is not the week for those calls to catch a bid. Even though we've heard some rumors about OPEC and Russia maybe making some emergency cuts, that seems to have stemmed the tide, but not enough to give those calls a big lift. So we got to get some of your questions. Let's go really quickly out to one more product complex, because it was moving quite a bit. We don't get a chance to talk about it a lot here on the show. It's copper. We always talk gold, maybe a little bit of silver. It's usually the precious stuff, the more the base metals and more production type metals don't get a lot of love out there. And also they haven't been huge option stories. That's starting to change a little bit out there in copper. Obviously a big driver for copper still is Chinese demand, and obviously that's been impacted by what's going on out there in as a result of all the pandemic concerns. But copper has evolved a bit as well. It's not 100% pretty much Chinese demand driven as it used to be, which is also an interesting evolution in the product, and also interesting evolution when it comes to volume. We used to have to kind of skipped copper on the show because it doesn't do a lot of paper. Now it's ticking up. It's not a couple of thousand contracts anymore. This past week, 26,000 contracts on the tape. So comparatively decent. It's not the E-mini, but it's getting there a little bit. The big print, by the way, copper at about 2.59 this week coming into showtime. So up about a little over 3% now. So it's continued its gains on the week. And the 2.69 calls were leading the tape here with about 1,016 on the tape. That was the lion's share. Those were coming up out here in March. So 1,000, that's actually a pretty decent paper. Actually, no, I take that back. It was a 275 calls doing about 1,100. That was the winner, and those were coming up here in May. Actually, it's going a little bit farther out. Upside action here in copper, which is kind of interesting. Let's go back to March really quickly. It's got about 19 days to go with about 43% of the paper going up there. Let's look at how the vol and skew are lining up. The vol coming in quite a bit, over 2 handles here. So vol getting a bit of annihilated out here in copper. Maybe people thinking the impact of this pandemic has been figured out. Seems a little early to me, but hey, the market's crushing that vol like they know something out here in copper. Looking at the skew here, the puts were about 2.8% rich, so the bid was to the puts. This week, the bid is even more so to the puts, nearly 5% rich. They got the money. Calls roughly unched. The calls were about 1.5% cheap. They got the money this week. They're about 1.1% cheap. So even though we've seen most of the paper in the calls wing, at least here in March, is kind of unched, which is kind of interesting. Not what I expected out here. But yeah, a little more action in copper. It's kind of fun to mix in a different product, a different metal out here than just what we've seen out here many times. But speaking of what we've seen, we're seeing a lot of questions from you guys. So without further ado, I'm going to get Tim and Sean to put on their question answering hats now because it's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your segment, the Futures Options Feedback segment. Got a lot of questions lined up here. First off, Tim, we kind of touched on this earlier in the show, but we had this question come in about a month or two ago. Sean thought we should table it for when you're next on the show. It came from DemoCat. You kind of touched on it, but we'll get an official answer nonetheless because it's a little bit different flavor, what we just talked about. DemoCat wanted to know, are there any plans for micro Russell options? So he went not just the micro, we already talked about the micro futures and the micro options. Sounds like the answer is a no. But he specifically wanted to know about them in the Russell flavor. So, Tim, let's get an official answer for Mr. DemoCat. He's been waiting a couple of months here, sir.
Yeah, I mean, the answer is no, right? Like we said earlier, we're kind of focused on the regular micro E-mini futures right now. But the one thing that I'll kind of point out is when we look at the Russell 2000 Micro, which is 1/10 the size of the Russell 2000 E-mini, when we look at what that contract is worth, it is a little bit smaller than when you're looking at the S&P or NASDAQ. So what I mean by that is when we look at the Russell 2000 index, it has a $5 multiplier. So that only makes that contract about $8,500 plus or minus right now. It's about half the notional value of S&P and NASDAQ, which will therefore the margin will be about half as well because all these are in the approximate 5% range, which is subject to change. So even though the Russell is a micro, it's one of the smaller ones, and I think that would be something for people to keep in mind too, is that they could put a little bit more money to work in the futures. Not necessarily looking for maybe some of that extra leverage or juice from the options, but since the future's smaller, they might be able to use it a little bit differently than some of the other micro indices.
Well, Sean, you're the one who tabled that question for Tim a couple of months ago now. Are you pleased you finally got an answer to that one, Sean?
I am. I always get these questions about new products, and it's It's always refreshing to have Tim on the show with me and with you, Mark. So it's great to get that question answered. But they come all the time, and I'm always pointing them to the CME Group website for answers, CME Group website for education, CME Group website for all different information regarding products. But I haven't been, like I do with other exchanges, I haven't given anybody your email address, Tim, I swear.
Yes, he's been circumspect on that one for you. He's given other people's addresses here on the show, but not yours, Tim. So you've been sheltered by Sean. All right, let's see here. Next up, here's an interesting one. I'm not sure what prompted this, but it's kind of interesting. Keeping on the equities tip, comes from Ellie. Ellie wants to know: are there still size limits on how many E-mini S&P futures you can trade electronically on Globex? Obviously, there's always going to be position limits. That's kind of a nature of the beast. They're pretty sizable. I don't know if you have to worry about them, Ellie. I'm trying to think, Tim. Maybe she's referring to, all I can think of here really is kind of the early days, obviously, of Globex and indeed the E-mini, when there was a limit put on how many of the E-mini futures you could do electronically, because they still wanted a lot of that business to head to the pit. So it made sense to kind of put a break on the E-mini. But those have been gone for a while. Is that what you think she's referring to, Tim?
That's a good question, right? So I think first you need to make if it's a position limit question, the position limit in E-mini S&P 500 futures is 300,000 E-mini. So certainly should be accommodating most people's positions. The other thing that it made me think about, Mark, was not so much what you were talking about, but even currently on Globex, we do have by contract what is referred to as the max order quantity, where is a function of a control on Globex to ensure orderly markets and some protections against some potential fast fingering and stuff like that, is that in E-mini you can send a max order quantity of 3,000 futures. So other than that might be the other angle they're looking for. And that type of information where it varies and is specified contract by contract, go to cmegroup.com and download the Excel file, which has all of these constraints by contract code.
Well, there you go, Ellie, and anyone else who's curious. 300,000 on the position limit size, 3,000 on the fat finger size. Hopefully, both of those sizable enough to fit within your needs. If you need to do more than 3,000 at a clip, maybe you look at some larger, beefier products out there instead. But interesting. That's why I love the listeners. They always throw interesting curveballs. Speaking of which, here's one from Belden. Going back to the crypto here, Tim. Belden wants to know, excuse me, what are the plans for the Ether reference rate going forward? People are never happy. They want all the products all the time. Obviously, we were just talking earlier in the show about the Bitcoin options. They're finally live. They, of course, track off of the Bitcoin reference rate. You guys have an Ether reference rate as well. In fact, you made some tweaks and adjustments to it late last year. So a lot of people thought when you did that, maybe there were some Ether products in the Ether, pun intended. Obviously, Ether is the number 2 overall options and indeed crypto product out there from a volume perspective. So it would be the clear next choice, which is probably why Belden is writing in about it. But I don't want to put words in your mouth, Tim. What are your plans here for the Ether reference rate going forward?
Oh, man. What are we, 3.5 weeks post-option launch, and it's what have you done for me lately?
They always want more. Welcome to my audience. Welcome to my audience, Tim.
Yeah, and I think they're right. With respect to products on Ether, right now we're focused on Bitcoin options, Bitcoin futures, but we did introduce the Ether US dollar reference rate with our partner crypto facilities back in May of 2018. And over the past few months, we did round out that number of constituent exchanges to the same 5 that contribute to the Bitcoin reference rate. You now have Bitstamp, Itbit, Coinbase, Kraken, and Gemini contributing Ether US dollar transactions to both the Ether real-time index and the Ether US dollar reference rate. And that's a great development. So continuing to see the robustness of that regulated benchmark on Ether US dollar comes to it. Great to see. But right now we're still focused on promoting the reference price, getting people to use that as the trusted and tried and transparent representation of what Ether is worth at any given time in U.S. dollar terms. So we'll continue pushing that, but nothing in the product hopper for Ether right now.
right. Unfortunately, that music means we come to the end. Man, how quickly an hour flies by when you're talking equities and crypto and a little crude and copper and, of course, answering all of your questions. Keep them coming. We'll have to do another Q&A palooza here on the show because you guys send in so many questions. We love them. Keep them coming. We love to hear from you guys. But before we go back around the horn, checking with each of my cohorts, see what they have cooking. Let's start with Tim. He's our guest here in the CME Hot Seat today. Tim, obviously people are interested in more products coming down the pike from you guys. That's kind of the number one question we get on a lot of this stuff. So if you want to break any news, Tim, now is the time. The floor is yours. And maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can expect either from the equity complex or from the crypto complex at CME. Now is the time, sir. The floor is yours.
So unfortunately, no news to break today, but thanks again for having me. And all the product questions, all that demand that's out there, it's glad to see my team will be busy for the foreseeable future validating it. So it's good to see the interest in the product pipeline, but no breaking news today, I'm sorry.
Just you and I talking here, Tim. No one's listening. Just you and I. Just two guys talking remotely via a vast array of electronic devices. Well, you're right. Tell your product guys, keep listening to this show because they want their roadmap. Just listen to this show. What people are writing in for, that'll keep them busy. Of course, you know where to find all the stuff Tim and his team are working on. CME'Group.com is the place to go. Click on the equities for the equities. Click on the crypto. Of course, you can get all the crypto now in the TWIFO report as well. So that's kind of fun. Everyone who's been asking us about what the SKU is going to look like, you can now see it for yourself. CMEGroup.com/TWIFO is the place to go to begin that journey. And speaking of journeys, he's always traveling somewhere hither and yon. So who knows next week where the heck Mr. Sean will be. Sean, where are you heading and what is cooking in the land of FTSE, sir?
I'm in town next week, so maybe I'll be there in person. And Mark, thanks again for having me on the show. And Tim, it's just a real pleasure to be on the show with you as well. It always is. And I've got fond memories of that hallway in Boca. It was a lot of fun. But continue to watch Russell 2000 minis and micros at CME Group. If you've got questions, I give you my email address every time I'm on the show, smith@FTSERussell.com. Please send me any questions. You want to talk about the components or the makeup of the index itself? I'm happy to have those conversations. We can talk about the stocks, how they get into the index, how they come out of the index, the weightings of the various sectors. I'm happy to talk any and all Russell with the gang on the show. So, Mark, thanks for having me. Tim, great to have you as well.
There you go. Hit the man up. Make him regret giving you his email, smith@FTSERussell.com. Give him a follow over there while you're at it. @FTSERussell is, of course, the place to go. On the Twitters and FTSERussell.com, the place to go for all that data you guys like on premium harvesting and recon and all that good stuff. It's all over there as well. On behalf of Sean and Tim and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great, awesome questions. Keep them coming. And we'll see you back here next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.